Hey, what's up, traders? Trader Tim here from E-mini Mind, bringing you another Monday market analysis. Today is Monday, March 16th, 2015. It's funny how the markets repeat themselves over and over again. So you'll probably I'll probably sound redundant when I start talking about how we are now going to be trading right in the middle of a 50% long and a 50% short on the daily chart of the ES. So a couple of things I want to go over in the video. I want to break down the setups from today's trading. We'll look at a 5-minute chart. The first thing I want to switch to is a Heikin Ashi candlestick on a daily chart. Something I don't do very often, at least for these videos, but you've probably heard me talk about the value in the Heikin Ashi candlestick indicator, not indicator, but candlestick study, rather. So you'll notice that when I switch it to from a traditional candlestick chart, where you have the high and low indicated by just the actual low, high, and then the open and close. All of those actual numbers are indicated, and if it's a bullish day on my toss chart, it highlights in green. If it's a bearish day, it's highlighted in red. Well, when I switch over to a Heikin Ashi candlestick chart, rather than starting each new candle from the open, it starts it at the midpoint of the prior candle. And so now, when you're pulling from the midpoint of the prior candle, you get these trends that develop that you have multiple days of green in the uptrend that are very much clearer. So if we use this little block of uptrend here, and if I switch back over to the regular candlestick chart, you see how we've got red candle, a couple red candles, couple red candles up here. You see the chop a little bit easier with the candlestick chart, but if you flip over to the Heikin Ashi chart, that same uptrend that might have looked like a pullback on the candlestick chart, with the Heikin Ashi, it gives you a nice clean trend. So you can visually see, okay, the trend is up. Okay, the trend is now down. And so when we get over here, you got this dragonfly doji, or the spinning top, rather, where the open and close are really close, and you got the long tail on either end. And now the candles are starting to close green. So the trend is now changed. Now, if we kind of back up a little bit to, you get these sections of very green, very clear trend in one direction. And if I can go back and find sections like this where you have green, red, in just alternating candles, alternating colors of the candles, it's a very clear indication of the sideways chop that this market condition is giving us. So as we come over to the current price action, and I always leave this extra space on the right of my screen so I can kind of, look at potential scenarios and realize that this open space to the right is where the new candles are going to be forming. So we've had this nice uptrend, nice clean downtrend. Now we're getting into a potential new trend of rally. Now the fact that we've came to the long at 2039s and then came right up just about to the short at 2075s, I would look for the market to come up again, once again, to 2075s and either break right through nice and cleanly and have another rally of green candles, breaking the 61.8, confirming the 2039 long, at which point the target is 2155. But what's more likely to happen, given that we have the FOMC meeting announcement here on Wednesday, we're more likely to see some chop within this range. Some chop in the form of different candle colors closing, so we'll get some green, red, green, red. The potential for a breakdown of 2020s, and Wednesday's FOMC meeting will be very important because of the context of being right in the middle of this range. So the actionable trades are shorts at 2075s and longs at 2040s. There is no retracement to be had right in the middle of the range, taking with a limit order. So that's an area to be of caution. If I go to today's chart on the 5-minute chart, I'm going to pull up just today's price action, and I'm going to go back to a candlestick chart just for a moment. So you can see the gap up. You notice with the Heikin Ashi, it just pulls from the middle of the previous candle, so it doesn't show the gap quite as clearly. But if I start from the beginning of today's price action and draw the first 50% retracement, we broke out of that immediately. Right at about 8:45, we traded and moved to new highs, at which point we went into extensions, being from highs to highs for the rest of the day. That first extension traded up to its target and then just passed, and then we can draw from that, use that same anchor point up to new highs. And this second one traded down at 2064.50s. We started to get a little rally, and then subsequently tested that extension again, but that trade was stopped out. And as I've been talking about, using the Heikin Ashis for trailing purposes, stopped out at 2066s, I believe it was, and then it retested and ended up going to new highs. But you know, when you're trailing your stop, not only are you protecting yourself when the market does hit its target, giving the market room to run, but also locking in your profit along the way up. You know, this trade could have easily turned around and not rallied once again. So, you know, getting stopped out of a trade for a small gain or break even, having it double bottom and then continue on to the target, you know, no harm, no foul, essentially. You're not losing anything in the long run by trailing your stop in that way. You can't kick yourself for getting taken out for a point or two profit, having it retest and then break to new highs. It's just the way the market is. So if we pull out a little bit here, you can see the short above us, the 2075s, and you know, I'm looking for, I'll go back to the extended session so you can see what's happening here in the last couple of minutes. Pulling back, I would think that we would retest here tomorrow 2075s pretty easily, at least, you know, in the morning or overnight session before coming back down to 2040s. But so we have Tuesday's price action, and then Wednesday will probably be pretty slow leading up to the FOMC meeting announcement. So there's not going to be a whole lot to do here other than maybe a short at 2075s tomorrow. So yeah, that's basically about it. You know, looking at the context of the market on the daily chart, where we're at on the daily chart, in conjunction with what news announcements do we have coming up this week, should make for a pretty good trading following Wednesday's FOMC meeting announcement. Usually the FOMC announcements that Thursday following, the markets just flip a switch and get super technical again. We've seen some great trading here intraday, and I certainly plan on expect that to continue. So with that, we'll wrap the video up for today. If you have questions, as always, feel free to shoot me an email. We've had some good email discussions in the last week or two with a handful of different traders that have brought up some good questions. So if there's anything you have specific to your trading, give me a shout. And as always, you can find more videos, how-to instruction, and all of the webinars that have been recorded and new webinars in the E-mini Mind VIP area over at eminimind.com/VIP. So with that, have a great week, and we'll talk to you soon.